So this is third day of our bootcamp. Oh shit. No. Yeah. This fourth day of our bootcamp. And we are almost finished with the technicals. So now you know levels, now you know how to pretty much explain high quality reversals. You also know how to find weak points, but we didn't go through that enough. So today we'll mainly you also know how to find weak points, but we didn't go through that enough. So today we'll mainly go through those. So these topics, main one will be, okay, so first we'll talk about news, and we'll talk about liquidity rules. Then you have weak levels. Then we'll talk about, what is this? How to, yeah, and complete analysis. Complete analysis. So I hope that we'll go through them all today. If it's gonna be too fast, then we'll add Asia and entry models. And if it's gonna be enough for today, then we are gonna do Asia and entry models in the next call, and we are done. And price delivery, but price delivery is part of these. So yeah, let's go through something chill. Let's start with something chill, and that's news. So did we talk about this? No, right? Not much. Okay, it's just a small topic, but I think it's good to know. And it will just be exceptional scenarios in future in live market. It will happen, I don't know, once a month maybe, but still it's good to know. So we said news are accelerated price action. So news equal accelerated play. If you look at price action, we can all agree that most of these moves were probably engineered before, were planned, well planned before. Like every single move here is planned right in advance. It's predetermined. The same with news. The price and the results of the news are already decided before the release, right? Institutions with Bloomberg see news release 10 seconds, 20 seconds before us. And even before that, there are insiders, there are people who decided, and of course, big institutions probably have access to the information. So if the NFP is bearish today, it's already decided. Everyone already knows, right? Except for us retailers. So the price action runs exactly like it would run in a normal day. So runs exactly the same way, meaning there is no random move in this market, right? It's just, so if, for example, there's a move that's planned for 3 weeks, a bullish move, and we have NFP, then this move will be executed with the volume in the market. It will be executed in one day, in the same day. So what does this mean? It means that everything that we analyze will be faster. Everything that's happening on the price, all the transactions happening on the price is like, I don't know, 10, 20, 100 times faster. And this will also apply to our entry models. So it will work two ways for us. If you have an entry model, for example, a reversal pattern, right? So we don't care about entry models yet. It will be the last thing that we'll do. But let's just say the most correct entry model in this case would be, so the structure would be M15. And the most correct entry model would be an M15 bullish close, right? So I'll draw a bullish candle here. If we have news before this, and let's say the news release is here, it will mean that everything from this vertical line is gonna be accelerated. Meaning instead of an F15 close, we can increase it, we can accelerate it by 5 times, maybe 15 times if you want to, and you can say that you will enter on an M3 bullish candle instead of M15. So let's say M3, or sometimes even M1 candle instead of the M15, and it will have the same weight, right? Another example, so some people can imagine it better. We are in a high time frame level, and the most correct entry here would be with an F5 breaker, and we have the news release here on the vertical York time. Let's say with CPI, NFP, or even some chill news, as long as there's volume. So, for example, the correct entry model here would be an M5. Now, instead of waiting for M5 breaker structure, you can use M1 breaker structure. So it would be, again, accelerated by 5 times. Oh, sorry. Where is it? Yeah, here. So this is how it would apply to the real market. Now I'll show you some examples. Anything is fine. Okay, let me think. Yeah, okay, let's do something recent. Yeah. We had an H1 price behavior right here. So this would be an H1 FBOSS. This would be the high time for low from the left. It was high resistance and weekly. You did that in your homeworks, you know. This would be the stop hunt. And for example, after this one, the most correct entry would be to wait for an H1 bearish candle. But you see, everything that happened after this was way faster. And if we waited for the H1 entry, H1 bearish candle, we would have our entry around here, right? So again, it's H1. We can accelerate it, let's say, up to 15 times. So M4, M5 is good. Then you go to M5. You have, instead of H1, you wait for an M5 bearish candle. Then you refine it. And it's the same exact entry as if you executed it in H1 in normal price action. So if there was no news here, this is how price would look like on H1. So I hope this is clear. That's the first first way of using news in your advantage. And a second way to do that is to use it for levels, which is rare, but it could happen. So entries and levels. It is mentorship. I emphasize that we only trade high time frame levels, meaning H1, H4, sometimes rarely M15, but there are gonna be exceptions, and that's levels that were created after news. So same thing. We have some price action. This is how it would look on H1, let's say. This is an H1 price action. So really nice. Let's say H1 extreme, right? Or H1 ALQ. But if there was news here, then you will not really see this price action. You'll not really see the structure. On H1, you'll just see a one big bearish push to the downside like this, right? With some wicks right here. Maybe you'll see an H1 wick, that's all. But because this was news, everything that happened here on M5 and M15 is equivalent to H1 and H4. So you can also use it as level to trade. Okay, so this is what you'll see on H1, and this is what you're gonna look at on M5/M15. So something like this, really simple. I'll show some examples now. Oh, is it recording? Oh, it is. Okay. So let's go to your homework. For example, we had this cell right here, and it looks like this cell came from nothing also, right? And we know that this was Friday, 2nd of February, so it was NFP, probably. This means that everything that happened after the NFP release here that we cannot see on H1 and H4 is actually lying on M15. So look, this is H1, right? What are you gonna do when price reaches this zone? You would have a 60 pip zone without any trading activity, right? The only level that you'd have for a trade is here, but price blasted through that, right? You see this little reaction. This could be your entry, attempt for entry, and then it failed. So if you look at this now, you're clearly reacting to nothing clear, right? But since this was NFP release, you can just go to M15 to check the details that were there during the news. But you don't want to over-refine it. If you go to M5 and there's too much noise, then M15 is the sweet spot. So for example, here you see this little line, which would be the ALQ. And this is what we would trade. But on H1, you don't see it. But this level, this ALQ on M15 that we see is equivalent to M15, to H1, H4 level, right? So see, instead of trading this would become a shit level because of the news, because it would just be a random high out of all these highs, right? Because there's one more high above. So you could basically avoid this trade, avoid the one in New York here, and only take the one from the highest point, right? So this would be your attempt if you didn't know, and if you saw the news, you would try to short above this. Okay, let me go to M5 to check something. I don't know if this is news, but probably not, so I will not go through that. Okay, I'll show one more example. Let's play it. Let's see. There's not much happening here. Same thing here also. This was your homework, if you recall. It was really hard to mark price behavior here, if you remember, because the structure was a bit weird. But same thing. Here we had news release. Oh, it was here actually, on this bearish candle. And everything that happened here after this candle is news price action, right? So everything here is becoming faster. And let's say even if you look for H1 FBOSS, we don't want to just stay on H1. We can go to M15 to get clearer structure. So I'll choose M15, right? And now you see way more price action. So, I mean, it doesn't really change anything on your analysis. You just see more, and you are allowed to use this as, for example, H1 FBOSS. So I chose this one specifically because it was a strong low. I mean, it looks like it would be more eligible for structure than one above, since it was too small, but both options are correct, right? And then again, you had news release the next day, right here. I believe this was NFP again. What happened? Price went down first, so it induced more sellers, early sellers. It stopped out all the sellers here, so this is your active liquidity. And since this is H1 price behavior, you would usually wait for an H1 bearish candle, right? But again, if you waited for an H1 bearish candle, you'd be pretty deep down already. So the most correct one would be M15 or M5. Even M5 is correct. So you see, price took out a high. It did not close bearish on M5, so we still wait, we chill. Then price goes out up again, and then closes bearish. So instead of waiting for an H1 bearish candle here, you already have an entry here. After this bearish candle, price comes back, and you can have a trade. One more thing, there was an entry model here, which would be correct on M5 as M5 breakout structure, but since it was news, you can also just go to M1 breakout structure. I mean, it would end up the same way. So the internal breakout structure would be here, and you would get an entry above, right? So I hope this is clear. Let's go to the next one. So we are just reacting to opposite rebalance here, making this low weak. Was nothing here. This is news price action, but it did not give any entry, I think. So that's fine. Was there anything even? Let me check. Yeah, so there was nothing in this price action. Then where is it? There was news here, but not much. And same thing here. If you had news here, and there is some level, and if you find some level that makes sense inside here, you can also use that for a pullback, for example. But I'm looking for something specific here. Okay, so we said there could be something here. We can check if there was something. Yeah, same thing, right? You didn't really see this price action on H1, but on M15, I think we could mark this level. It's pretty clean. So we go to H1. What happens? We are reacting to a break and retest on M15. But this M15 is H1/H4 liquidity level, right? That you can trade later on. So again, if you didn't notice, you would probably treat this as one big void without any major liquidity level, without any major trade. There's nothing here. There's not much here. Let's step down. Nothing. Okay. This was also news. So again, instead of M5 entry model, you can basically use M1 if there is. Sometimes news can be too fast and you'll miss the trade, but I think that's part of the game. So we had a weekly open gap, nothing, and same thing again. Look, we don't really have any clear level here, maybe this, but since this price action was news again, news release right here on this vertical line, we can use M15, right? M15 for a level. In this case, it wouldn't change much, but for example, here, you would be able to avoid one loss. So this was the H1, the level on H1. I think it was just a wick, but we could treat it as ALQ, right? Like all the mitigations here. This would be the last pullback. I mean the first pullback before the push. But if you go M15, we could realistically refine the trade, the level a bit higher. So it would look like this, and you would avoid, let's say, one loss right here. So I hope this part is clear and we can move on to the next topic. Okay. Cool. So the next topic is liquidity rules. In our analysis, we have a lot of components, and one of them is liquidity rules. So we have to clear that one out before we do everything together. So in the last call, we said that there is 2 or 3 ways to form liquidity, right? One form is liquidity from the left. Liquidity from the left. Next one is price behavior. So everything that price does before a reversal, right? Before the highest point of the reversal. And the last one we had was price delivery. Price delivery. So this is how we evaluate if a reversal have enough liquidity, right? Let's say we look at the left, oh, there is liquidity. We look at price behavior, oh, there's not much. So there's not much, or there is some liquidity, right? Good price behavior is always if price induces opposite traders. Okay, momentum inducement is not counted as good price behavior. So if you have this, you would say it's enough for a trade, for a temporary trade, but later on when we analyze that reversal, we would say it did not create enough liquidity for a big swing move, right? Most of the time. And in that case, we have price delivery to compensate for it. So for a good reversal, note that good reversals are really rare. I would say like 20% of reversals are actually high quality, right? But for a good reversal, we need at least 2 out of 3 of them to be good. That means that either the liquidity is really good and the price behavior is really good, or the liquidity is really good and price behavior is non-existent, then we have price delivery. Sometimes a more shit move is no level, no price behavior, and we only have price delivery. So that's, for example, when price reverses out of nowhere, and then it just breaks structure and continues lower, right? You must have seen multiple reverses like that on the chart. So let's first define what's a good level. Good level is high resistance liquidity. It has to be high enough to correspond with the move. So if you have a huge daily move and you just find some, I don't know, H1 high resistance liquidity, then it's probably not enough, right? But let's say if it is this daily move and on H4, oh, sorry, and on H4 you see high resistance liquidity like this, it's probably good. So that's a good level. Another good level would be ALQ. So I think this is really sexy, but for ALQ, the interaction takes a bit longer. So let's say take it out, price usually does not just buy right away, but it will see 2 times or it will give price behavior, right? So ALQ, what else? I would say big structures are good. So uh, big structures meaning daily structural points, weekly structural points, depending on the size of the move. Again, like if we are trading internal on H4 here, right, and then H1, and then suddenly we take a weekly low, it's a big level. It's a big level to trade away from, right? So we would expect a bigger move. Note that big structure cannot be a breaker structure, not a boss. So in the last call, we also said if we break structure on high time frame, although this is a weekly low, this would also be a breaker structure. And we don't want to trade anytime and every time when price breaks structure on high time frame, right? We don't want to automatically look for a buy unless there is another level that supports that structure. So make sure that it's not the current low or high that we're breaking. Then it would be a breaker structure and we would not trade that. So okay. I hope I didn't forget anything. Oh shit. Let's go, Jonas. Oh, and another good level is a trap. Yeah, exactly. Yeah, I forgot that one. The traps are sexy. Uh, so again, the traps that we trade, SMT, and context traps overall. Build up traps. Yeah, okay. Yeah. I think that's all. That's all we need. Make sure that context trap always have to have some more confluences, okay? Like it has to be high resistance or strong high or something like that. But that's all. So let's go to price behavior. The only good price behavior we can have is if it induces opposite traders. Opposite. So same thing. The only time we say price behavior is good is if we see a clear peg back structure, a clear signal for a trade in the opposite direction. So F was inducement. And this bad price behavior would be momentum inducement and just casual reversals. Okay, so remember that this is the only good price behavior we can have. And also, it has to be big enough to be seen on the main time frame. So if we are trading H4 levels here, then we want H1, right? H1 price behavior to say that the move is good. But if, for example, on H4 level, we just have F15 price behavior, then we will just say, oh, it's good enough for an entry, not enough for a big swing move. So we can still take the trade, but we will usually just target something internal or the nearest H1 opposite liquidity instead of, let's say, the overall structure on H4. So the time frames game will be really hard, but I think we'll solve that when we backtest together. The best, and then we have price delivery. Normal price delivery is what we call an MSU, manipulation setup. So let's just say we have a reversal here. We have some level. So let's just say this is a healthy reversal. Okay, so good high time frame level, good price behavior. So we already have 2 out of 3, meaning we don't need any crazy price behavior anymore, right? So we already have everything, and that would mean that price can just run healthily. Healthy run would look something like this. Oh, something like this. Just a simple liquidity sweep, go, liquidity sweep, go, right? Sometimes it doesn't even have to continue sweeping. It will just go because the reversal was so healthy. It can even be internal. So we can have an internal low here, high, sweep the low like this. That's fine. It can be an internal sweep like this. That's also fine. And yeah, an unhealthy price delivery would be price just doing this, okay? Oh, okay, this looks like shit, but like this, like price just shooting to one side. If this happens, you know that this low will be taken out in future. Yeah, so now we can evaluate every reversal that we want. If we don't have 2 out of 3 here, but we only have 1 out of 3, so meaning, oh, what the hell? Meaning we don't have, let's say, price behavior here, but we have a really good level. Really good level. So we have level from the left. We don't have price behavior, meaning price delivery now has to compensate for the price behavior, meaning it will go out of its way. So we will not expect a normal thing like this anymore, a normal sweep and run like this anymore. But we will expect something different, right? Price can either consolidate, so that's one option. Price consolidates or manipulates multiple times before it goes. So multiple sweeps. Price can take PDC, which is my favorite. If we don't have price behavior, and for example, we think for some reason that this low is going to hold, let's say we have timing, we have more confluences with the low, then a PDC should be fine. And we are basically hoping that this extreme low, then that this internal liquidity here will hold, right? So it will look something like this, and then price will take the extreme and then go. Or again, it can even make a move, make a normal move, go tap into something, come back, take the extreme again, and then go, right? So, so these are all scenarios that I can imagine. Can we expect BDC if you have 2 out of 3 rules? You usually don't expect it. Of course, it can happen. Anything can happen, right? But let's say even random thing like this can happen. We have a good level, good price behavior. We leave one low behind. So we leave this extreme. It can even be a wick, like extreme wick here, and then it will take it and go. That's also an option. So yeah, okay. When can we expect this low to hold? Like what confluences can we have? For example, we can have one entry model planted right here. Let's say we have a momentum inducement here. As I said, we don't count it as good price behavior, but it would mean that price is ready to reverse from this point. And in that case, the only way to get more liquidity is with price behavior, right? So a different entry model sometimes will have more confluences, but you'll see this in the backtest. Okay, so I'll show you the examples now. Okay, let's start with shit level and shit price behavior. I mean, good level and shit price behavior. So the most famous example here we have is the one from February this year. We can all agree that the level we took was generational. It was the best level after a long time, right? So let's say for some reason we are bullish. Let's say this trap is weak, right? This high is weak. Then what happened? We took ALQ on weekly, which is again a high time frame structure, right? Weekly sell side liquidity. It should be a good level. Then we go to daily. We don't have any price behavior on daily. And what price did? It just compensated with a PDC. So that's why it's called PDC, right? Price delivery compensation. So because we had a good level, we could expect this low to hold, but we don't have any price delivery here. You see, price just making lower low, lower high, lower low, lower high, and then high high, right? So we just have a simple breaker structure. But if you think this low can hold, then you can expect it. What happened after price swept it with a weekly open gap, which is the same as momentum inducement into the gap, it rejected. And after the rejection, you should again expect a healthy delivery. Or you can even expect a really delivery without liquidity sweeps, like just mitigations. So one thing I said, we trade mitigations when we are trading pro trend and when price is already ready to fly. So in this case, it would mean that after price delivery, we have enough liquidity and we could try taking mitigations instead of waiting for liquidity sweeps like this, right? Like this. It's a healthy way to trade. And of course, the PDC should be on the time frame that corresponds with the size of the move that you're expecting. So here you're trading weekly. It would mean that you should expect a reversal on weekly or daily, right? Then the lowest time frame I would choose here is daily. And of course, in some cases, you can even go to H4 to see more details, but daily is more than enough. Okay, let's go to the next example. Oh, this is really nice. So, just to get some context for you, we'll go to high time frame first. Yeah, so what's happening? Well, we just took this high resistance liquidity. We already gave a reaction, so we are probably ready to go higher, right? And now we are reacting to this high resistance trap, right? So it's just, I mean, it looks like some structure. If we zoom in, it looks like some PY, right? But since it's from the left, it should be a trap from the left. And then you also have equal highs right here. So we are reacting to that one right now, meaning we are fully bullish and we are just looking for a buy, right? Before you look for a buy here, you should analyze these lows. Like, oh, is this low enough? Did we have, multiple manipulations? Is it a healthy move? Usually, if this is an unhealthy move, you should not trade a continuation. You should just wait for price to go lower and give you a better trade. But in this case, we filled MVG. We did have some liquidity sweep here, some liquidity sweep here. Like everything looks fine. So we are just waiting for the next push. The next level we have was a daily FVG, which is perfect. But with an FVG, we need liquidity. So you can go to H1. Now that you're on H1, you know that this price action was created by news, right? What is this? CPI probably. Let me just check it to verify. Yeah, it is news, right? Clearly news. So all the liquidity here that seems insignificant are actually H1, H4, right? So we do have liquidity. Now, if you look at these liquidity levels, you can tell, oh, this is clearly an ALQ, right? This is build up, the last point, and then you void. So you have an H1, H4 ALQ with daily FVG, meaning the level is good level. The price behavior. So let's get the price behavior. We are expecting a daily move. So, from a daily H1, H4 liquidity point. So let's say H1 entry model could be fine. And on H1, we don't see anything. So we see structure and we just see a breaker structure up, right? Another confluence with this low that we have is that we have an Asia low taken out. And after the next call, when you go back to this price action, you'll understand why there's a trade here. But we basically have an entry model here, which is telling us that this low could hold, right? That we basically have a running trade right here that could hold. So if you think that, you have two options. You can wait for a stop hunt. So this could become price behavior into liquidity level, or this could be a BDC, right? And both options are correct. You can try a trade in each. So what I do personally, every time I have a situation like this, I'm just ready for 2 losses. So 2 tries, right? Price can buy from here. Oh, price can buy from here, or price can buy from here. 2 options. But even taking the extreme is enough if you have enough confluences for the low. So what happened? Bam. We had extreme. We had a weekly open gap into this liquidity point. So what was the guy's name? The guy from the last call. Whatever. So we had this extreme taken out with weekly open gap, which again means that this is weekly momentum. Oh, Hamza. Yeah, okay. Are you here? Hamza is not here today. Oh, okay. I'll write this down. So we have weekly momentum into extreme, and then we closed bullish, right? So it could be an entry model. It's already telling us to trade, to take a buy the same day. And as I said, after a PDC, it should, oh, what the hell, After a PDC, it should be safe to take mitigations. So after this PDC, this low is pretty safe. You can just use this as a POI if you want to, right? It also lines up with Asia low. So let's say with Asia low, you can get a trade with confirmation. But how I would execute this trade is just, drawing a POI like this, putting a limit here, and take a trade like this, bam, easy. In craziest cases, let's say if this was not a weekly open gap and this was a normal trading day, I would just wait for a rejection and enter a trade like this, and we're chilling, okay? But again, good level, no price behavior, PDC, price should be ready for a swing move. One more thing to note is after a PDC, the low becomes a weak level, okay? It just becomes weak lows. You never ever want to take a mitigation of the PDC. So you never want to use this as a POI or anything like that. It's just a trap. Like if price is closing here in future, you don't want to even try like a reactional trap. I mean, a reaction trade here. No, there's just wait for sell or you don't do anything. Okay, so we can go to the next example. Yeah, it will just shoot through. Next example we have was right before this. So let's go here. Oh, it's the news day, probably. So same thing. We go to daily, H4. You want to analyze where you are right now. So I'll just move it here. So what's happening? Well, we are, remember that we just had a high resistance liquidity here taken out. We just have a break of structure. So if price wants to be bearish, now you can play 2 scenarios in your head, right? It can take extreme to sell, or it can take the high and maybe look for sell if there's enough confirmation, right? That's what we know from this price action. But what we know for sure is that, for example, a sell here is not going to be a big sell, or doesn't have to be a big sell. Then we will also analyze the lows. So this low had a momentum inducement. This low had some stop hunts, had a rebalance here, right? Then it's an ALQ. So after this ALQ, we could say that even though we did not have price behavior here, we did have a level, but we did not have PDC. After this healthy delivery, we could say, okay, we can just continue higher, right? We don't have to wait for extreme anymore. So price could buy from here. Are we tapping into some resistance? Not really. Not really, right? Nothing that could push price lower. Okay. So again, now we'll work our way into the current price action. So we'll analyze all these also to see if there's any problem with the trade that we are going to take. So I'll go to H1 and analyze every reversal here. For example, if there was a shitty reversal here, then taking a continuation would probably be very risky, right? We would need more confluences to compensate for it. But if all the reversals here look fine, then everything's fine with me. So this one didn't really have a level, but what happened after we had price behavior? So we could create some temporarily valid low here, right? So you see here, we have an FBOS. We also have some build up here on lower time frame, an FBOS up, inducement, stop and down. So we can say that this low can hold for now. Okay, let's go to the next low. What happened here? Oh, so we are just mitigating something. The problem with mitigation is always that we need liquidity. The reason why we don't usually trade mitigations from POIs like this is because there's no liquidity. So we want to see some price behavior here. Even on H1, you can see what's happening. We have a really nice trend line. We have a trend line breakout, right? With this trend line breakout, we also have an internal fake breakout structure. So we said internal breakout structure can be lined up, can be used only if we have more levels, I mean more confluences. So we have a trend line breakout as additional confluence for this break, right? So we do have some price behavior. We do have a stop hunt here, meaning if I want to take a continuation from this low and I have enough confluences, I could, right? So what happened after that? Price took out the extreme So we took extreme on H4, on H1, H4. Let's go to H4 first. So we are taking the last wick. On H1, we can see it took all the liquidity, right? All the liquidity that we can see, all the structure, the last structure that we can see here. So last internal structure, extreme point, and we are reversing here. So the level is good. Now you check if there's some confluences for this buy, and you see it's timing. It's 2:30 my time. We'll go through timing in the next call too. So there is some confluences, but there's no price behavior. We can say, oh, this could be an F plus, but the inducement happened here and it clearly failed, right? So not the best one. Even if you want to count it as a valid one, let's say with trend lines, it's not the best price behavior because it was set twice later on. So let's just say it's a bad, there's no price behavior or it's really bad. Then if you think this low will hold, what price will do? Price will take an extreme, a PDC from that point and compensate for it. So good level, no price behavior, good PDC, right? But this does not mean that you cannot try these continuations here. Of course you can. But if I take a trade like this, I usually have a stop loss down here. And if I trade it as a continuation, like if I take a buy here and a stop loss here, then I usually do it with a lower risk because it doesn't really make sense for me to risk this while expecting something lower to be taken out. So what happened after Asia into PDC into a swing buy? And again, after this one, after this move, all these lows now become big points, right? Become liquidity for later. Okay, so I hope this one is clear. Let's go to another one. We just broke down this one, so that's fine. 20. Yeah, okay. Let's do this one and I'll do one more for you. So what happened here? Again, let's do a complete analysis. I hope that we didn't sweep the ALQ. Oh, we didn't. Okay, perfect. So we made perfect equal lows here. I think it stopped like 1 or 2 pips above even. That would mean that we are looking for sells, right? That after this bullish push or like even during this price action, we are actively looking for sells, but we are not forcing sells. We always need a level. So first thing we see is this thing. Obviously, it's not a good level. It's just a random structure. It doesn't have any confluences, right? Okay, let's go higher. We see that price rebalanced here. That price did stop out some liquidity here. That it could hold temporarily. If not, then this would be a perfect break and retest to sell away from, right? So we have two options. Either price will hold and sell right now, or this and will sell away from this. And again, we cannot know that. We have two tries basically, but we'll always wait for some confirmation to see what's going to happen. So what confluences do we have here? This level is extreme liquidity, by the way. So it's the last structural point of this range. We set out this high. Now we go to lower time frame. I'll check the timing. I'll check the confluences. So we did create a high a bit before timing, so it's not ideal. So for now, I don't expect it to hold. But let's say after I see a PDC giving a little reaction, right? Then we could try the trade. So it was H1 mainly. Price rejected. I mean, just use this as an educational case. Don't see it as a trade, but let's say we could technically look for a PDC, and after the PDC, we can say the move is healthy, and you just continue the trade, trading with the trend into the low, right? So another example. Now let's do something more recent. H4. So on H4, we had this beautiful buy, right? So let's see. Obviously, the liquidity level that we set was really good. You can see it's basically the end of this build-up. It also happens to be like a strong low, right? But it's also a major structural point. For example, if you look at this low and compare it to this low and this low, then obviously this one seems like the most massive one, right? Like the biggest one. So I'd mark this as a good level. Good level. We had no price behavior. Some would say that there's an FBOS here, inducement here, but it looks really far away. So like after such a big move, I would just imagine that there's liquidity here, maybe here, but like this far, not really. So we should look for more confluences, different confluences, right? And in this case, it was a momentum inducement. So technically, we have a confirmation for a reversal after this bullish candle. So we have good level, not really good price behavior, but we have a confirmation for this low to hold. What happens? Price did go up a bit. This is obviously not a swing move. This is obviously not the move that this moment of inducement is creating, right? Was creating the whole time. And then we had an H1, H4, PDC, and we just continued higher, right? In this case, it's pretty rare, but in this case, it took out everything, like completely everything. So again, good level, shit price behavior, good PDC. Simple. And again, some confluences for the low or high to hold. Sometimes the trade, sometimes the price action will not give you a PDC, and it will only reverse with 1 out of 3 confluences, for example here. And this will happen a lot. So I'm just preparing, like, until now, I'm just preparing you for the highest probable trades that can happen. But later, during the backtest stage, I think what you guys will have to focus on the most is actually trading the shit price action. So for example here, the level was really good. It was something like a build-up trap on H4, the last H4 structure. And you see, we did not have any price behavior or price delivery, right? So it just reversed like this. But if this happens, what you can know for sure is that the reversal was shit, and this becomes a weak high in future. So I hope that this part is clear. Now let's go to some different scenarios. And that is when level is shit, price behavior is good, and PDC is also good. So let me try to remember some. Yeah, so the most famous, the most recent one we have is the current one right here. So we had an H1 price behavior. We were not really sure what price is selling from. So let's say if we go to H1 and you look at this price action, then you see we're not really sure what price selling from, right? This could be like a trend line, like the last point, last buy side liquidity. It's not selling from this structural point. It's weird, right? And this was the only H4 level that we could see. But we did not sell from that. We already reacted multiple times from that. So a really bad level. We don't know what we are selling from exactly. Then we had price behavior, right? And again, if you have some confluences for this high to hold, then you can also just take a trade here. Taking a trade here is a bit risky, but after a PDC and rejection, or the continuation after PDC, it's easy trades, easy and healthy trades. So shit level, good PB, good PD. Now let's go to another one. Okay. What happened here? Okay. So in this case, we could say that we are buying from the daily ALQ here, but after I saw so many reactions and so many failed reactions there, I didn't consider it a good level anymore. And like for me, we're just buying from nowhere now. So the level is bad for me. Then I go to H1 and I see that H1 is giving nice price behavior, right? So a low, some of you saw this, so I'm proud of you. But it was up, inducement down. Again, we need some more confluences. We don't just want to trade a pattern, right? So what happened? We created a low with timing. So this was a reversal timing. And then we had news. So what happened after news? So everything that you see now on F15 is basically H1 price action. Okay. So we had a PDC, price continued, and after this we had a mitigation. And then after this, as I said, we should have enough liquidity, and it's pretty much okay to take mitigations for a continuational trade. And that's how you could have traded this easy bullish move. Okay, let's do one more. There's nothing. Oh, this is beautiful. Or I hope it is. Talking about this one. Liquidity, price one. Yeah, so there should be a PDC here. So again, we had an ALQ, we had price behavior. So price should be moving healthily, right? After this price behavior, like after this move, we don't really have to wait for an extreme to be taken here. We can just continue taking continuations. And what happened here? we can even do the same thing with little reversals. So a little reversal here would be a level, price behavior. So there was no price behavior here, but just momentum inducement, meaning there should be some PDC on lower time frame. Okay, it's not really PDC. The best one would be here. Can go to M15. Yeah, the best one would be lower, but you see what happened, right? We took extreme. So because we did not take the lowest one here, we then take the extreme one here, we take the extreme one here, and then this basically compensates for the loss here, right? And after this move, for example, you could pretty much say that you're in a healthy bullish move, and any continuation after this is a healthy trade. So yeah, I hope this part is clear. And we can go to the next one. PD is not always needed to have key boss. No, you don't. You can take it right before. As I said, the price delivery already starts here. You can even have this, right? The key boss is here, but you can already have this. So we went through good level, shit level, good level, good PB, normal price delivery. Okay, I don't think, I mean, we could. So let's go through good level and good price behavior. So you can just imagine it. Let's say this is a really good level. It's high resistance on H4. This is really good PB, right? It's a really nice price behavior on H1. Then of course, after this move, you don't even expect price to go lower. You don't expect price to go here. You know, it doesn't even have to mitigate, right? And you just had normal price delivery after. So Monday opened, Monday created a low, and normal delivery takes and goes, and it's ready to go, right? So for example, these days, from here on, you don't expect any pullback anymore. It doesn't make sense to short. Otherwise you'll be shorting against a healthy bullish move. So that's one example. I'll try to get one more. Yeah, one more thing is here. So this was the same one. We had daily price delivery, even H1, daily price behavior and H1 price behavior, a really good high resistance liquidity on weekly. It does not need to go lower anymore. And these upcoming days, I'll be focused on just catching continuational sells, right? Without expecting price to go higher or higher. So I think we went through all scenarios, and then there will be the unique one. So as I said, there's a weakness in our strategy, and that is when random POIs hold, because it's impossible to consistently predict POIs. So when we are in a daily or weekly, and you see a big random demand like this, it obviously is a trap. But if you treat it as a trap, you will not have a trade for the next 2 months. So note that these random demands, supply and demand zones on daily and weekly can hold, right? Even if it's a trap and it just does this price action alone could be 2 months worth of price action. So if this happens, sometimes we will have a shit level, right? So we are mitigating this, which is a shit level, but we also have shit price behavior. So price could just go and break structure, right? Of course, we're creating a weak point and it will be taken out in the future, but it's not gonna help us in the next 2 weeks, right? So what happens here is you have 0 out of 3 so far. You don't have a level, you don't have price behavior. And what price does is, again, a PDC can compensate for it. So you can have an extreme taken out, right, and go. Obviously, you want to be a bit more careful here, like just the rejection is not enough, right? Or you can have some abnormal price delivery. So for example, price, for example, this price already takes out ALQ, then comes back, and then it takes out the low again. So this could be some form of compensation again. And in this case, you'd have one, and it's possible to trade this. But in reality, how we would trade this price action, we would just zoom in. Like we would not try to catch a big move anymore, or a big sell or big move here, but we would just try to trade H1, H4, right? Like find levels within levels, find levels within this range, and just trade little reactions instead of focusing or gambling on this PY or trap. And completely out of topic, if if you have supply demand on daily, weekly, sometimes it can just hold and swing from it. Okay, so don't just try to force trades into it. Just wait for more price to develop, and then create a bias based on what you have later on, and ignore this completely. Let's say if you are bullish from here, the price will probably make some good level here. It'll probably make some good reversal for continuation, and you're Gucci. And from here, you can come up with a new bias or a new idea. So I think this is everything that I wanted to talk about regarding liquidity rules. And now we can go to our main analysis. Oh no. So our analysis has multiple components. That's why it's really hard to revenge trade. It also cuts down the frequency, and it's easier to evaluate trades. Like when we take a shit trade, we know that it's a shit trade, or when we take the best trade ever, then we know it's the best trade, right? So we have 3 steps, and that is bias, setup. Oh, okay, I'll make it a bit bigger. And entry model. So for now, I think you can do 2 out of 3, and later on we'll add entry model. But bias is built with, wait. So this is how you do it step by step, okay? You never start with an entry model or a level. You always start with a bias. So how do you get a bias? First thing you look at is, I mean, there's no order to this. You can just start anywhere you want, but you have to do all 3 eventually. So you have a target, you have a level, and you have liquidity rules, right? So if you watch closely, you saw how I always started my analysis. Let's say we had some price action like this, and we are here. The first thing I analyze is not that we are sweeping this low, not that we are reacting to this trap, but I start analyzing from here, right? And that is liquidity rules. So you want to start analyzing with the highs and lows, with this high and this low, and then work your way in, right? Most people do it wrong. Most people start here. They'll see, oh, Asia low swap, H1 low swap, and then they're gonna look for a buy, right? But if, for example, this low is shit and this low is also shit, if you take a trade here, a buy here, it's probably gonna fail because it's not even bullish, right? So that's what I mean by liquidity rules. Always analyze from external, and you have to identify where you are in within price. If, for example, you wake up here, then same thing. You want to analyze the liquidity level that you're reacting to, the price behavior, and then later the delivery, right? So that's all regarding liquidity rules. Target, we are looking for weak points. Later on, I'll explain to you how to find weak points. Oh, my bad. So, but for now, you know how to find some, right? For example, if this is a context trap, or this is a context trap, and we react to it, it could become a weak point and a target, right? If we sweep something here, then we should be temporarily bullish. Again, then that would mean that this high will become a trap. It can also be a weak point based on how it was formed. It didn't have any liquidity. It didn't have any PB here. It was just a liquidity less high. Then again, it would be a weak point. So I'll later show you how I'll do it on the chart. But you can have multiple weak points, and when that happens, it will probably mean that you're forming a future bullish move. So it can be one short-term weak point, or it can be multiple of them. Sometimes you'll have also a super unhealthy move, like price will just continue like this, and every low here is weak. In that case, that would mean that this move was just a fake move, and in future, you're just gonna take a big short and target everything here. And finally, you have level. So let's say it depends on where you are, but let's just say you are waking up here. Before we start the first topics, you wanna do is
we are gonna do
find a level.
one
So
more
what
thing.
are we reacting of? Right?
I
Exactly.
didn't do
Right?
I didn't explain all
It
the
could
moves
be
in the
an FEG fill. If it's just an FEG fill, then you move to the next
homework
point.
video.
Oh,
I mean, I
it's
did
just an
explain all
FEG
except
fill.
for one,
Do you have
and
liquidity?
that's this
Oh,
one.
we do have liquidity from the left, from the right. Then we do have liquidity. Do we have a target? Right? Oh, there's a weak point here. There's a weak point here. Bam, and you formed your whole bias for the next 3 days. So example, I'll just choose a random price action. Anything is fine with me, really. But let's start here. I'll close my eyes. Bam. So what's happening? Is Hamza here? No. Oh my God. My favorite guy. So look, sometimes you'll also be trapped in two random moves. And it will be hard, but I think you can do anything. It's not that hard, right? So now we could analyze this. We could analyze this high and low and work our way in. That will just tell us that we're gonna be bullish, right? But it's not gonna tell us the bias for this day, for example. Like knowing this information is not gonna help us this day, but it could help us in the next few days. So for example, this high reacted to nothing. This high did not have any PB, right? So it's a weak point. It's a target, but not for this day when we will short or long. We don't know yet. Again, this high also reacted to some random equal lows, equal highs, right? So again, nothing specific, not a really good level. That's your weak point. This low reacted to daily structure. It was a daily break of structure. We also took extreme from H4 as an additional level, right? We also have a trend line breakout. So if you're inducing people for short, we have a level for the buy. The level is pretty good. So the low is not exactly weak, right? It's reacting to something really good compared to these two. The way it reversed is not the best, but later on, you saw how price delivery compensated for it, right? We have multiple inducements. So in this case, I would say that we are clearly bullish. Since we are bullish, this would also mean that all the traps from the left are, all the POIs from the left are traps. So the first big trap I see is this one, right? But it's too big, so we'll get to that later. So what did we do so far? We decided our targets, right? We decided a level for a trade, liquidity rules. So for example, just with the information that we have now, we can say that we are gonna take a buy. We can safely take a buy, right? But if we wanna do it intraday and we just wanna react to this, then you do it the same way. Is price really ready to buy? What are we reacting to? Are there any targets? So let's just say we're really high and our first thought is a short. So are we reacting to something? Yes, we are taking out this H4 extreme, right? Or even this wick right here. But we are taking this trap. This could be considered a trap too. This before the big move. So I'll mark it like this. So we are reacting to some level. We have a level for a trade. But do we have something to reverse? Do we have any price behavior or anything? In this case, not really. Because if you look at H1, we are just breaking higher and higher, right? So it's not the best move. But we just have a good level. So far we only have a good level, no big price behavior for a short. Then you look at target. Do you have any targets? Now I'll analyze every low here. So first thing I see is this low. Is this low reacting to something? Well, not really. We did take this liquidity, but it started 3 times, right? So we are clearly not reacting off that. We are not filling any AVG. We are not rebalancing anything. There's nothing. Okay, maybe there's price behavior that or something else that compensated for it. No, see, not really. Again, just lower low, lower high, nothing. So we are reacting to nothing. We don't have any price behavior, nothing. So this low becomes a weak point and it becomes a temporary target, right? So I know that long term, I want to look for a buy to target all these daily highs, to target this daily high, for example. But now I know that price is obviously not ready to buy. And then you do the same thing. You look for a setup. So again, a level that price is trading from. So we do have a level, and then you look for entry model and you see that M15 gave you nice price behavior just for a short, right? So this is how you would come to a conclusion, for example, for this day, and this is how you'd come to this trade. Really easy process. It's not that easy, but you'll learn it eventually with enough backtesting. There's also price delivery there. Yeah, there's price delivery here. So we also have price behavior, but we cannot use it for liquidity rules because it's too small, right? So it's just enough for a trade, but it's not enough to justify a big move. And after this one, we'll continue. So again, we are still bullish. We are looking for a level. First level I see here is an ALQ, for example, right? And then I'll just look for trades. So here we are reacting to a trap, right? The trap gave you nice price behavior. There was a stop hunt here. So there could be one loss here. And then you had news. You struck the level. We have a level. We have an entry model. We have a target, right above. And you have a perfect setup. So this is how you would utilize bias in real time. Then you have a setup, which basically just means a level, a trading level. This can match with the level that we have here, but it depends on the price action. If you're taking a complete reversal and you're at the lowest point, then of course of course, the level that you use for the bias here is the same as the level that you're using for the setup for the trade, right? But let's say if you're trading continuations, then the level for the setup will be different. So this level right here that I just drew only justifies this low that we're gonna reverse. But then you have to find a new level, let's say here, where you'll take a trade. So here, and then the last step that we had was an entry model. So after bias, you have a target. But then you have to find a new level, let's say here, where you'll take a trade. So here, and then the last step that we had was an entry model. So after bias, you have a target, you have a level, you have some reversal, you can say that we are ultra bullish. You look for an entry model here, and then we just continue to trade. And this is the whole process of how I take trades, like every single trade. And for example, every time you take a trade, there will be something missing. For example, you don't really have a good level, you are trading a shitty reversal, right? Then the trade automatically becomes worse, like it's a downgrade of the trade, right? Entry model will always be there, so this is gonna prevent you from revenge trading, from having FOMO, and a trading level should always be there too, but a trading level should be strict. So that's why for now we said that we are gonna use H1 only. So this is how we will do our complete analysis. Main point I want from all of you, I want for all of you to learn is this is analyzing properly from and taking all the information on the chart. Okay, so I have a smart guy asking, Johnny asking, you said H1 only and above, question mark. So it's not strictly H1. Of course, you will trade also M15 levels, that's possible, but it depends on where the price is, okay? So I'm just gonna show you an example of how to choose timeframes to trade. It depends on how internal or external you are. If you just broke out of this daily structure, the first thing for you to do is to go to high time frame. You don't want to you don't want to trade F5 reversal here. You don't want to trade F15 reversal here, right? You want price to chill out a bit. Same thing here. We just broke out of this daily high. You don't want to look for a sell here on F15. You want to wait for price to chill out a bit, to consolidate a bit, and then it will do something. But let's say after this H1, after this daily low, we established a new low, and now we are trading inside this range. So now I don't need daily anymore. I know exactly where I am. I can trade H4, right? I can trade this on H4. And then what happens? We are stuck inside this range here. Then of course, if I wait for H4, then I'm not going to have any trade. Then I can go to H1. The more internal I am, the lower the time frame I can choose, right? So now I can go to H1, and with this way you scale all the way down to M15. But I would say M15 levels are also pretty rare for me. And then again, we break out of this, so we're in this daily range. The best thing to do for you is to go to H4, right? So you go to H4, price is reacting to some trap here. Right, okay, it reversed from nothing, it becomes a weak low. Oh, okay, let's try bias here. So here, this high obviously reacted from nothing. I'll go to H1. It didn't really do anything. It was just an H1 ALQ, but we're bullish now, so we don't want to use this for a big short, right? So if we just take we just took ALQ, we just had a bigger structure down, right? But we're not bearish yet. For bearish, we would expect a PDC, which we later had, which could be a loss. But right now, as price goes down, we have a rebalance. So we have a level to trade. Liquidity, we do have liquidity, right? And then ideally we would have a PDC, which didn't happen, but also we also had a trade here. Some breaker structure or something. So we had a level, we had liquidity with that level, we have a weak point, right? And if you're not sure, if you're stuck in between two, you can just choose to target something internal. So for example, you can buy, TP this one, take a short here, hit a stop loss, and you're done. And then what happens? We take out this high, we broke structure. We again react to just a trap. We don't have any price behavior here. So again, this high is not going to hold long term. And we're actively looking for a long. So now when I'm looking at this price action, I don't really see any clear level, right? So there's nothing. We are sweeping this low, but this low is irrelevant. It didn't break structure, so nothing again. And then we swept, oh shit, okay, sorry. So we had a target for bias, we had H for low that broke structure up, which could be fine. And then you just look for entry model. And if it happens, you can have something again. Really nice. What happens after this? We take out a relevant high. So this one could give a reaction, but you don't have any target, right? You don't have any reason to think for now that this will be taken out. And you're also reacting to nothing from the left. So you're just sweeping a relevant high, which could give you a reaction, meaning any trading day, any price action after this high, any short after this high is pretty much low quality, right? Because of how little confluences you have. And price reacted to this trap. So this was news momentum trap. Gave a reaction, gave a fake break of structure up from the trap. So you had a short. And again, you could target the trap. The low, you wouldn't expect it to be taken out, right? And then you took out the low, which is your main level. You have a high that reacted to nothing, which is a weak high. You have price behavior that again supports this low, right? And you can form a bias for this day easily. Could you avoid the short after the bullish rebalance? Here. You could, yeah, you could, because you're bullish mainly. So taking a short in itself is already a bad decision, right? But I would say like this could look like a realistic trade that any of you could take in real time. Same thing here. Oh. But the PB you're taking is internal, right? Yeah, the PB is internal, but because the whole PB is internal, it's fine. But if we had a break here and then the FBOS was an internal high, it's not good. Okay, so I'm just gonna try it again so you understand it. This is not price behavior. This is price behavior. Okay, as long as the whole thing is internal, it's fine. But you cannot have a high internal and then a low external like this, because in this case, it would probably just be a sweep for a sell and it wouldn't justify the buy. So that's clear. Same thing here. What happened? We set a good liquidity level. We had good price behavior. So good level, good PB. The low is probably going to hold right after this. So we establish as a good low. And after this, we wake up here. We have we just look for a setup. So we just have a level. We look for how price interact with it. We look for an entry model that would match with the level. And you would have an easy trade, easy time. So this is all regarding the analysis. And now I'll just talk shortly about the weak levels to complete it. And I think we can call it a day. So there's many ways for weak levels. Okay, there's multiple ways for a weak level to form. I'm just gonna write few that I can make up right now in my head. But the easiest one is context/context trap. So for example, we are bullish, we sweep something, obviously all these become temporarily weak. Next one we have is equal high lows. So whenever price sweeps equal high or equal low, it will eventually become a weak point. Okay. So we have equal highs like this. Okay, this is not that good. Let's say we have this. This equal highs. Oh fuck. Okay, this is better. And we are selling from it like this. So this point will eventually become weak and we'll target it in the future. The next one we have is based on reversals. So every time we check a high or low, you check how it reversed and what it reversed from, right? But these are all the weak points that you can use to create a bias. So I'll show you something extreme now. Let's try context trap. Okay, Hamza is not here. Who wants to talk? Nobody. It's a free one-to-one. Open your mic.
Me.
Mark,
Yeah.
do you speak good English?
Yeah.
Okay. So, would you say that this level is a good level for something to change here? Look, we are just breaking down here. Would you say that from this point on, you would expect, let's say at least something like this?
Yeah.
Yeah, it's an ALQ, right?
Yeah.
So would it make sense? Like, how would you treat this high, for example? do you think it's a valid point for a mitigation, or after this low, it should
Weak.
be point?
weak.
Yeah, exactly. It should be weak, right?
Yeah.
But look at what happens. It mitigates, okay?
Yeah.
This one fails to buy. Right? And this happens. So what does it happen for, what does it mean for us? What do you think?
It's simply a build-up, right?
But why did this happen? Were we wrong? Or can we use this in future somehow?
No, actually it reacts, but we know that it's weak. In the
Exactly.
future, it's gonna be taken out.
Yeah, exactly. Bam. So realistically, if you trade it this day, I think the best move for you is to actually buy, right? And target this. And it would be pretty much impossible for you to expect that this high will be mitigated.
Yeah.
So it's correct. It should be a trap. And in the near future, whatever you do, you just look for a trade and you target that exact point.
Yeah.
Right? Bam, simple. Good job. So that's one of context traps. Now let's talk about equal high lows. It's not that good based on reversals. So again, based on reversals, would be analyzing a high like this, and this would also be a weak high, right? But for such a big move, we need also a big reversal. So homework for you guys. I think I will send you some time periods, and you'll just try to mark up the price action based on what you know. And if it's good, then I think after the next call, during the next call, we can talk about entry models. And after that, we can just start backtesting and collecting data. But this is really hard. So any questions? We have 10 minutes for questions, if you have any. Or we can end the day here.
Can you hear me?
Yeah. Yeah.
Okay. So just to ask, like the stuff that you just taught right now, I'm seeing like some interesting details that it's kind of getting harder, you know. But is it okay to just focus on like the, how do I explain it, like the high probability stuff, or
Yeah, you can only trade high probability stuff if you want to be, if you straight up want to be a swing trader. Like if it's fine for you to take one trade a week, let's say, then yeah, then you can, of course.
okay, because I think it's kind of easier.
Yeah, it is easier. I think you're gonna have decent return. I think the frequency is not that bad, right? But there can be, let's say, like a 1 month period where nothing happens. Then it just depends on the person, on how well they deal with patience.
Yeah. Oh, I see.
Yeah.
Thank you.
Like, look, imagine if you only took high probable trades, this whole period from this day until, let's say, this day, you will not have any high probable trades. So it's like of course you'll have trades, but I'm talking about the best trades that can happen, right? You'd have 35 days without an S tier trade, basically. So November 5, that reversed, only had PB, no PD. So it's it sounds like July equal of 5th November. Honestly, I think this is gonna be taken out soon, but after a bullish move. Is there any way to recover after we had wrong bias for 1-2 days in a row, or just delete and reanalyze? Okay. So let's start with wrong bias. Wrong bias can happen. It will happen. It's inevitable. And I don't think it's just this strategy. You will eventually have wrong bias no matter what strategy you trade. Like it will happen. There's no strategy with a fixed rate of 100% correct bias, right? The only way to only have correct bias is to see future or to trade something really subjective and be the luckiest man on earth. Like you'll trade something subjective and every time you'll win a coin flip between short and long. But yeah, it will happen. So if you have a wrong bias, it depends on the specific case, really. Like, okay, let's see which day you can have wrong bias. Let's say here. So let's say after a daily LQ, you're bullish. What happens? You take a 1 short, you lose. You take 2 shorts, you lose. Yeah, and then you just wait for the next trade. Or you can wait it out a bit. You can wait a few days for more price action and then trade again. But I don't think we are reacting to the same level for that long. And I don't think there's many scenarios where price will take that many good levels. So just reanalyze. Just reanalyze from the high and low and see if you're in the right move. Is there any way to, oh no, for news in scenarios where we trade, okay. So question is, where we will trade in, okay, so if you trade news, do we stay in or no? If you trade demo, then you can stay in. If you trade live, then it doesn't make sense to hold full volume. It also depends on how much capital you have. Like if I'm trading news and I have 8 funded accounts that allow trading news and I'm just risking one of them, then for sure. But if it's your only account and or it's your personal account and you want to treat it as good as possible, it also depends on where you entered. Let's say if you entered here and the news release are here, then you probably want to close it, right? Like I usually close 80%. But if it's far, like if I enter here and the news are here, then I close 50%, count with some buffer. I always count with like 10 pip buffer and then act accordingly. Close the amount I have to. When we have the elbows, can we trade into the stop hunt? Yes, okay. So I think this is a really good setup. Let's say we have a trap. And we have price behavior, but also an FBOS away from the trap. Yes, you can take a trade here and target the trap. Makes sense. But we'll go through that next time. It's fine. 2, 3. Does it always have to? Is there areas where we do not have liquidity level? Okay, so this is another question. Oh, it's been 5 minutes online. It's pain. If you need, yes, we do not like. But yeah, so as I said, this is the most extreme case that can happen, and I would definitely advise to against trading that. But if let's say we have a daily or weekly supply or demand, it can happen. Like that mitigation can be the reversal, can be the level, even though we don't have any liquidity. But if you have BB and BD, then it could be end up nice. How about momentum traps created by news? No, it's nothing. It's just price action. You cannot, one more thing, guys. You cannot categorize every single high and low as weak or no. Okay. Some points are just highs and lows. There's nothing. You can only categorize some of them. Can a weak level be a time frame? Doesn't have to be on the time frame we are trading off. Okay, let me think a bit. Okay, so this is an interesting question. I think we don't. Okay, so what does it mean? Are we looking at weak level for a target, or are we identifying highs and lows? If it's just a weak level for target, then it can be any time frame, right? But the bigger the time frame, the bigger the high or low, the bigger the reversal has to be to reach that high, right? Let's say I'm just gonna give you an example. If price wants to take out this high and this high happens to be weak, then just this H1 PB is not enough to fund the move all the way to that high. So no, it's not always the same time frame. And if you're looking for weak levels, just for identification, just for evaluating highs and lows, then it depends on how big the move becomes. So here I would say, oh, we have price behavior, but on H1, but the bigger the move, the less relevant it becomes. So it becomes weak. Okay. Blah, 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 blah. That. So yeah, I hope everything is clear.
Wait, can I ask one last question, please?
Can you write it in a DM so I can see if it's a good question?
Okay, I just don't know how to phrase it. It's with PDC.
Is it per leg or the whole move? What does that mean?
Yeah, let me see if I can just draw something quick. So,
okay, look.
Yeah, sometimes I see like you say PDC is here, or for this one PDC, but then you have the whole PDC here.
Oh, okay.
Yeah.
It depends on what you're looking at. Like, let's say you're taking a trade here. Like it depends on what move you're trying to take, right? If you're trying to get another move till this low, then of course, then you can use this. But if you are trying to get a big swing until the next major low here, then you have to take this one. Yes or no? Like this would just be a shorter move. But if you want to take a swing for the complete high, for the highest high till the lowest low, then you need a PDC from the highest one. Like of the whole move. You're looking at the whole move always. And one more thing. Sometimes you can have PDC like this on M15 that funds enough for M15, but it's not big enough for an H4 move. Then what happens? Then this becomes a new one, right? And Price will have to do this before exploding and making the H4 daily move. Levels after the level has been set. Oh yes. Okay, one more thing, guys. Even if the level was swept, you can still have PB while being even after sweeping the high. So Price, as I said in the last video, the whole time Price is here, it's just interacting with the level. Okay, that's enough for the call. Could you just try this trade? Yeah, I'll just break it down now. But it was a shit trade. So no, better not. Okay, guys. Have a good day.